I'm your host, Hillary Bricken, and this is the Cannabis Law Now podcast, where we regularly discuss issues related to the cannabis industry, including investment, day-to-day operational issues, and potential reform on the horizon that will impact all cannabis businesses and investors in the United States. Well, today on the podcast, we have a very special treat. We have Brett Ballman and Karen Petrick from Salal Credit Union. And the reason why this is special is because it is few and far between to see financial institutions participating in the cannabis industry, despite the fact that the overwhelming majority of states have some form of legal reform and licensing. And the extra trick here is that financial institutions get to participate because of an enforcement memo that was issued by the Financial Crimes Enforcement Network back in 2014. And I wanted to bring Brett and Karen onto the podcast to talk about the ins and outs of cannabis banking, because we so rarely get to hear about the logistics of how this is done in such a way to avoid federal scrutiny, but also run a business at the end of the day. And I think there's a big misconception out there with cannabis companies regarding the level of diligence that must be done so that the financial institution can even undertake things like depository accounts. So, Brett, Karen, welcome to the show.
Hello.
Thank you, Hillary.
Hi. Okay. So let's just get into these questions. This is a conversational podcast. I'm just here to facilitate where this goes. Why in the heck did Salal pursue this in the first place? Because it's not like this is easy to do. In fact, it's wildly complicated. So why do this at all?
I can take that one. So the conversations really started for us back in 2012 when Washington voters passed Initiative 502, which legalized recreational cannabis here in Washington. We knew that this was going to be an underserved market, so we began conversations internally, working with our board, working with our regulators to figure out if this was something that we wanted to pursue. When the decision was made that we did want to move forward, public safety was by far the number one priority for us. That was something that we wanted to make sure that we could mitigate the risk and offer the products and services to these businesses to help accommodate them, knowing that this was potentially going to impact our local communities and everything like that. Because a lot of these businesses, they were operating in all cash. And so, how do we figure that out? How do we both protect the credit union, the community, and our members? So public safety was by far the number one on our list. And then secondarily, it was just making sure that we were helping state regulated businesses get the banking products and services that they needed. Think about paying an employee via direct deposit ACH, paying their vendor electronically, paying their taxes electronically. That was something that was very important to us. So those were the two primary reasons we really got into this.
We should take it, I think, a step back and remind the audience, in case you're a first-time listener, cannabis businesses generally cannot access financial institutions because cannabis is a Schedule I controlled substance, which means it is illegal as far as the federal government is concerned, and that obviously may change. We may talk about that a little bit today, but maybe not. But that is why they tend to operate in an all-cash basis, because it is a violation of the Bank Secrecy Act and a slew of other regulations and laws on the banking side federally that prevent these banks of all sizes and credit unions of all sizes from directly participating in the industry until we get the FinCEN guidelines. And FinCEN, again, is an acronym for the Financial Crimes Enforcement Network. It basically oversees enforcement of the BSA and other banking laws and regulations. And it came out with a memo, and it's part of the Department of Treasury, in 2014. So Brett and Karen, what are the FinCEN guidelines from the perspective of the financial institution?
Yeah, I mean, you covered a lot of it kind of in your intro there. But yeah, at a very high level, the FinCEN guidelines, like you said, were issued on February 14th, 2014, almost a decade ago. Kind of crazy to think about. Really, it was to also help address the increasing number of states that were legalizing both recreational and medical cannabis across the country. Those guidelines kind of set the framework for our financial institution. If they were to get into banking cannabis-related businesses, hey, here's how you basically need to do this. How do you comply with the Bank Secrecy Act, as you had mentioned earlier, and basically kind of sets the stage for, what suspicious activity reporting do we need to do, currency transaction reporting, and then it lays out a bunch of red flags for a financial institution to look at to address any, monitoring issues or anything like that. So, at a very high level, that's what the FinCEN guidelines are to us. But that, kind of getting back to the first question, that was really the driver behind, when I said when we decided to move forward, that was the number one driver behind that, which was this guidance issued by FinCEN.
And we should mention that that guidance was issued on the back of a Department of Justice enforcement memo called the Cole Memo, which we all know about at this point. It's been rescinded, but it was kind of a guiding light I think, for states when they were making their regulations and when they were determining how aggressive to be, namely Colorado and Washington, when they were setting up their cannabis programs. So, Brett and Karen, those guidelines rely heavily on the Cole memo, don't they?
Correct.
And even though the Cole memo was vaporized by Jeff Sessions when Trump was president, has that changed how you do business under the guidelines at all?
No, I mean, in a lot of our documentation, and Karen, you can jump in here too, a lot of our documentation basically just changed from Cole memo to rescinded Cole memo. But at the end of the day, that was still a guiding principle for our framework for banking cannabis-related businesses.
I mean, they didn't rescind the guidance or amend the guidance at all. So as long as that guidance remains in place, that's how we're going to, operate a program.
Right. And for listeners, what Karen means is Treasury did not rescind the FinCEN guidelines, but all of the DOJ memos on cannabis, they got vaporized by Jeff Sessions, which I think is an important point in that Treasury is behind this. Right? They want to track these dollars. They want accountability. They want public safety. And that's probably a good thing for all of us. And Karen, maybe I'll direct this question to you unless Brett wants it. How hard is it to comply with the FinCEN guidelines?
It's really common sense guidelines. There's really not a lot in there that's really specific to cannabis. I mean, they're just common sense guidelines. So it's not really that hard to comply. The problem is the staffing and the extra due diligence that we have to do. That's where the burden is. We need a lot more people and a lot more time to look at these accounts and really dig into the activity and the ownership and understand the complexities of some of the crazy ownership schemes that we see, and that's where the complexity is. It's just the time that it takes to do that. You can't apply that's the same necessarily just the same automated monitoring that you do for every other account to the cannabis industry.
And that automated monitoring that you mentioned, common term of art in banking, right? Know your customer. And this is this initial diligence that we all go through, whether we know it or not, when we open accounts, make deposits, withdraw money. And to me, the FinCEN guidelines are know your customer due diligence kind of on steroids, if I could put it like that. Because of the federally illegal nature of the businesses, it's a little more invasive. Did Salal have to revise and reform its KYC policies with these customers?
I don't know that we had to revise the KYC policy per se. I mean, we had some business accounts. We had a business account portfolio before we started banking cannabis, but we really built our department around the cannabis industry. So all of that was sort of baked in right from the start. And I think the biggest change that it might have brought upon us was maybe expediting a move away from manually monitoring or onboarding these accounts to a more automated approach, bringing in new systems that way to help satisfy the regulators that we were doing everything that we could to monitor for those red flags. If we're going to diversify out of the cannabis industry, then we would have to actually make some more changes. We can't apply the same standard to your everyday mom and pop shop. So.
Right. And you referenced the red flags in the FinCEN guidelines. Off the top of your head, do you know the big ticket red flags that Treasury is looking for, that Salal must look for under the guidelines, just to remind our listeners?
Well, it's a quiz right there.
If you don't, it's okay. I remember a couple of them. Things like, if you see a management company, think twice. Check on the social media of the actual cannabis company to make sure that they're not breaking the rules. And I think a lot of people, when these guidelines came out, everybody was quite thankful because it meant access to banking for obvious reasons. But it also kind of flagged that financial institutions were going to be dragooned into doing the work of the feds regarding kind of peeking into these businesses. And to that end, how does the typical cannabis company react to the diligence when you send it to them? This answer I'm dying to know, because I get clients that come to me and they say, I cannot believe the bank is asking for these things. And I'm thinking, well, it's not because they want to. They have to comply with these FinCEN guidelines. But what's the typical reaction that you guys see?
I mean, it's a mix. Obviously, I think some folks are just happy to have an account. They want to give us whatever we need because they desperately want to be able to bank, and that's great. Others are savvy. They understand they're in an atypical industry and that there's atypical requirements to open an account. So they're, prepared and ready to do that. Others are a little less patient. We get some pushback. I don't personally find our requirements very onerous. But it's all in how we prepare that message, how we prepare that customer at the start of the application process. If they know what we need ahead of time, they're comfortable with that, they can make the decision to move forward with the application. And that can actually go very smoothly if they have all of their I's dotted and their T's crossed in their documentation. And we can really understand their business. So it's a real mix. There's folks that we've banked for a long time who we're more comfortable with. Maybe we can accommodate a little bit better, or others that we're brand new to and they're very complex and we need a lot more information than maybe their neighbor. It's really case by case too. So, it's a big mix.
And just to kind of tag along to that, I think Karen hit the biggest part there. It's setting the expectation up front. We really try to train everybody, especially on the front line, that when you're onboarding a new account, you have to set that expectation. You have to set the understanding that, hey, we're going to be asking questions that if you've owned another business outside of cannabis, it's not going to be that typical question. And that's just part of our due diligence to, again, kind of the overarching theme here is to comply with Bank Secrecy Act, FinCEN guidelines, everything like that. Because if we don't protect our program, then we can't offer it globally to our members, and then any referrals that come or anything like that. So we're just trying to protect everybody here in the ecosystem, but setting that expectation up front 100% is the biggest thing for us.
And I think people need to understand that it goes beyond just that initial due diligence, right? You got your account approved, it's open, you're doing your payroll, you're sending your checks out in the mail, whatever. Do people still do that? I don't know. The main point is, down the line, we're going to have continued questions about what's happening in your account. We may ask for documentation or the purpose of a transaction that we might not do on another account or a more typical business account. And if you're not upfront, if you're trying to, avoid answering questions, you're just going to make it more difficult for us to continue banking you. So people need to understand that it's an ongoing process through the life of the account until maybe something changes federally.
And what still surprises me is that we got 38 states with some kind of reform, some kind of licensing and oversight system. Yet I still, when I'm in deals and we start to delve into financial diligence, I see cannabis companies that are banking with Bank of America or Wells Fargo or financial institutions that I know are not subscribing to the guidelines because the guidelines are not mandatory. They're elective. If you want to serve the industry, you should follow this. I don't know why those cannabis companies choose to go that route when they've got outlets like Salal and others now that are providing these particular services. And to me, as the lawyer, I'm thinking you're actually creating more problems by not going to a financial institution that's following these guidelines. Do you guys agree with that?
Yeah, 100%. I think a lot of it might just be an educational piece. I've banked with Bank of America for 30 years, so I'm just going to roll the dice. I don't know who else to go to. Oftentimes, it's a pretty close-knit community, so people talk, and hopefully word is now getting out that there are options, banking options that is, out there. But yeah, we see all the time people moving from Wells Fargo, Bank of America, JP Morgan Chase, the larger institutions that have made it very clear, we don't want to be in this business right now. So I think it's more or less an educational piece and just a comfort level with those business owners. Like, I've just always banked here, so this is what I'm going to do.
Yeah, it could also be an issue of the path of least resistance, where these companies do continue to set up management companies or they use personal banking because they don't want the headache and the expense of dealing with the FinCEN guidelines. I've just always found that incredibly unwise. And also in the diligence process, if you see a cannabis business with an account at a financial institution that's following the guidelines as legal, you think this is great. This is a super compliant business. They definitely know what they're doing. The buyer is going to be very pleased, right? That this is on the up and up, very transparent. And there's almost this kind of illusory but actual layer of protection in banking with the FinCEN guidelines because all hands are on the table, right? Nothing's being hidden. And that's incredibly important. Transparency is hugely important everywhere, but in this industry in particular. So let's pivot a little bit because I think people get confused about what the FinCEN guidelines really speak to. On the back of those guidelines, is Salal or are financial institutions able to lend and extend credit? Because obviously that is a huge issue in the industry because of the federal illegality.
Yeah, and it's really on a case-by-case basis, depending on the financial institution. So here at Salal, we do lend, but on a very limited basis. Typically, it's reserved for our existing members where we have the whole relationship, including the deposit relationship. So we understand, both the loan and the deposit side of things. We're traditionally just commercial real estate, and we do a little bit of equipment financing. Outside of that, we've not been able to get comfortable. It's not that it can't happen, but for Salal, that's kind of our risk appetite level at this point. So like I said, yes, there is lending. There are options, but at least on a limited basis. And we're traditional cash flow lenders. And so for an industry that's just getting started, oftentimes it's hard to qualify these borrowers. So, over time, as people get more profitable and more experienced, that's where we're going to be able to come in. But at least at this point, it's been a little bit of a challenge in order to get that lending piece up and running. But we will do it on a case-by-case basis.
Okay. And moving to kind of how life is under the FinCEN guidelines, and I'm curious about this question because people will ask me all the time, what's the best state in which to operate? Where should I go get a license? And my responses might surprise some people, but I tend to swing with the Cole memo, where I think you have the most protection in states that are the most regulated because, again, everything's kept honest. It's super transparent. Your feds are not going to show up in your backyard. They're not doing that anyway. But the chances of it plummet if you're in a highly regulated state, quite obviously. What is the most complicated state in which Salal provides services, and why is it complicated?
I mean, I think California is tricky. One, they have approximately 4,228 different license types. I exaggerate, but not by much. I mean, there's just a lot going on regulatory wise that way. That's difficult to maintain or understand really what the differences are between the two or between different licenses. That market in particular is very, you've got a lot of black market cannabis flowing through that market that makes it very difficult and challenging for well-intentioned and law-abiding business owners to do a profitable business. So there's a lot of skirting around rules or making very complex ownership changes or management structure changes to kind of get around some of the regulatory requirements or get around some of that black market infusion. So it's just, there's a lot going on in California. Aside from it just being a very big market, it can be a challenge for a number of ways. But I mean, that's probably the state where we found the most confusing ownership and management arrangements around ever.
I am not surprised. California is actually number one on my list for worst state in which to set up your cannabis business. Oregon is a close second. And that's because we have rules on the books. There's seemingly little to no enforcement anyway. And much of the ownership and beneficial owner financial interest holder regulations are very amorphous compared to other states. And I could see why that would make it difficult to run sufficient diligence under the guidelines.
Yes. I mean, we're responsible to know our customer, like you said. I mean, it's the guiding light of banking, know your customer. And that's really hard to do. One, when you can't be sure who all of those true parties of interest are, or when you can't necessarily rely on the regulatory body in the state to have done that due diligence as efficiently as we would like, or that we see in other states. Other states are a little bit more transparent, or we know that they're really digging into the backgrounds of these people. We don't have that same faith in California, unfortunately.
That tension is very interesting to me because the access to financial institutions is a lifeline for multiple reasons, right? It's not just public safety. Nobody can do payroll in cash. It's nearly impossible. And then, of course, personal liability for whatever you might take on yourself. I know that states are incentivized to get licensees in because they promised voters there'd be lots of tax revenue. You can't do that, right, without the bodies. But certainly states are not created equal when it comes to barriers to entry. And it's unfortunate because it impacts them, these licensees, on the day-to-day business operations. But aside from California, let's talk about federal moves. Right? There's a lot going on right now, and there are wild amounts of speculation, seemingly from all parts of the industry, about multiple things. I typically ignore these things with good reason. Over 14 years of experience, very little is legitimate. Safer Banking Act. And I'm not going to go through what the acronym means, but have you both seen The Walking Dead? You ever seen episodes of The Walking Dead?
Yes.
Safer banking to me is like an extra in The Walking Dead. It dies, it comes back, it dies, it comes back. And it's kind of like this political joke now. It's an olive branch to the industry that never goes anywhere. What's your take on it? With that very kind of cavalier oversight, being a little sardonic. And what do you think its chances of passing are now that it's like on its 7th or 8th life cycle?
Yeah, I mean, first and foremost, Salal Credit Union will support any legislation at the federal level that will help support the cannabis industry. I mean, hands down, whether it's Safe Banking Act, safer, safest maybe is next. I mean, who knows? I think it would be great if Safer Banking Act were to pass, but it'll be interesting to see what other financial institutions do trying to get into this, because as far as we're aware, it doesn't alleviate a lot of the reporting requirements that we still have to do. So, I mean, we suspect some people, some financial institutions will start to get into this, but how many, it's really tough to say. So in terms of, I think you kind of hit on it earlier in terms of percentage of passing or the likelihood, I don't think there's much of a chance. We've got an election year coming up, which who knows how that's going to go. We have a lot of geopolitical stuff going on outside of, the United States. So how is that going to factor in? Is Congress going to have time? So, I mean, it's really anybody's guess, but I think, being in this for so long, like you have, you start to get somewhat of a negative attitude towards it, unfortunately. So, we're not super optimistic at this point that anything is going to get pushed through this year.
And the other gorilla in the room that could swallow all of it anyway is the scuttlebutt around the DEA rescheduling cannabis into Schedule 3, which we know we've got a Department of Health and Human Services recommendation, now all 250 pages of it, with scientific and medical evidence supporting the move. DEA has never gone against an HHS recommendation. Doesn't mean they couldn't or that they won't. They have ultimate authority. But if cannabis moves to a Schedule 3, it's off Schedule 1. It's no longer federally illegal. Technically, it would be available on a prescription basis for cannabinoid-derived drugs. And what that means is that nobody knows what's going to happen to the state licensed markets that are adult use and medical in the wake of Schedule 3. We have a lot of people claiming to know, making lots of predictions. But for Salal and the other financial institutions, have you considered what it would mean for you in banking these state licensed entities?
Not much, at least at first, I think, without some sort of change in the regulations or the guidance. If that's changed, then we'll have to change our practices. And of course, it'll have some crazy effect on the industry as a whole that will impact probably the types of businesses we see or maybe what kind of activity those businesses can do. But in terms of like our due diligence or what we're required to do, that isn't going to change because they've descheduled it. Not until FinCEN tells us differently. We're still going to follow those guidelines, look for those red flags. That's going to be what guides our program until that changes. So I think it's just going to cause a lot more chaos more than anything else. Could potentially anyway, if it's not done the right way. And I don't know what the right way is.
Yeah, I mean, for us, it really doesn't change a lot unless, like Karen said, a regulatory body comes out and changes their guidance for banking specifically. Obviously, there could be a positive financial impact to these businesses with the IRS code and 280E. And so that could be a positive, but what are some of the unintended consequences of that? It's really hard to tell at this point.
Yeah, I think I'm in the boat with you guys, which is waiting and watching is what we're all doing right now. Nobody really knows what will happen. And it will take some federal intervention to clarify what this means for state markets, whether it's to banks or licensees themselves, to the DOJ, to other U.S. attorneys like we've seen in the past. I don't think anybody really knows, right, whether it's overall net positive or negative, despite the removal of the impact of 280E on the income tax side, which is positive. The rest of it, I don't think we know. Now, last question before I let you guys go. What are the biggest challenges Salal faces if things remain status quo?
I mean, if they're not going to update those guidelines or, make some changes to how these businesses are taxed, it's just, as talked about earlier, it's just going to encourage more and more complex ownership and management agreements that are difficult to understand and monitor. It encourages creative approaches to structuring your business so that you can just make a buck, right? So you're not bogged down by regulatory requirements or what have you. So if things don't change, we're going to just continue to see in a change industry anyway. Like there's just so much change in this industry because it's new, because there's a lot of cash, there's a lot of potential. All of that is going to continue over time. It ebbs and flows depending on the economy, but most of my team's time is spent either in an application or managing that change for these businesses. That's difficult to do. You've got businesses that have new owners, they've got new licenses, they have expiring licenses, they're converting in and out of the industry, or they're partnering with non-licensed companies to do licensed work because of whatever reason, X, Y, and Z. All of that makes it very difficult for us to do our due diligence and make sure that we know the customer that is in front of us and that we're comfortable with the arrangement. And a lot of those changes have to require a relook by our approvers at the credit union to make sure we're still comfortable with that arrangement and we're still comfortable with this ownership. So unless there's change both in the market just in general, but also in the regulatory environment, there's going to be just a continuation of this consolidation. lot of consolidation in the market. So there's going to be a tendency towards consolidation. There's going to be a tendency towards these complex ownerships. And that makes it very difficult for us to do our job.
Yeah, I think one other thing is just scale. As our members get larger or they expand or new members want to join the credit union, because there's a patchwork of all these state independent laws and regulations, that means that we have to keep up with all of those. And so absent of any federal consistent guidance that we can really latch onto, it just creates that scale issue of, having to either become more efficient, adding new systems, adding FTE, whatever it may be. So, that's a constant thing that we're trying to balance is, okay, we want to get into a new state or whatever it may be. How do we do that? How do we do it profitably? How do we protect the credit union? How do we protect the member? So, that's been a challenge from day one. And if things remain the same, it's going to continue to be that challenge is just that patchwork across the board at the state level.
I hear you. Okay. Well, I guess we'll see what's going to happen. Maybe actually this year in 24, because it's a presidential election, lots of things can shake and move. So I want to thank both of you, Karen and Brett, for coming on today. Thanks to Salal for the participation. I think it's very illuminating for our listeners, and we'll stay in touch over what happens in the coming months.
Thanks, Hillary.
Thank you very much, Hillary.
And that concludes today's episode of the Cannabis Law Now podcast. Until next time, stay alert, stay alive.